Now, as PCCW mulls over bids for the company's telephone and media assets, analysts are speculating just what exactly it is that investors like Macquarie, Newbridge and possibly even News Corp are eyeing. Some feel that PCCW's now broadband television, with more than 500,000 subscribers, is the crown jewel of the company. Others believe its main fixed-line business, with the possibility of tapping into the mainland market, is what's really driving bidders. Also, something of a cash cow. For a closer look, we're joined by Chaw, who's Managing Director of business consulting firm China Knowledge. Chaw, thank you very much for joining us today. First of all, what in your view is it that has suddenly attracted everyone to scramble for PCCW, if reports are to be believed?
Looking at a price of about 550 Hong Kong dollars, the market is not very optimistic that the deal will be successful because the political issue is the most important issue in this acquisition. Here we can see TPG, Texas Pacific Group, and a consortium with Newbridge. Of course, Macquarie might be representing News Corp. Okay, one is looking at asset acquisitions. One is looking at the business aspect. I think News Corp is, of course, very interested into the broadband TV. As for TPG and Newbridge, they're looking into the asset play, the properties of PCCW, for example. Okay, there are rumors, in fact, that these two consortiums have met the central government in Beijing. And then the proposal was pretty attractive. That is, keep China Netcom as the major shareholder, something like a 50% shareholder. And then they probably keep the 50%, and they play either on the assets or the business aspect of the business. Yeah.
So you think that's acceptable to the Beijing government and to China Netcom?
I think it's going to be a commercial deal. I think the political issue is overplayed by the media. As long it sweetens the deal and benefit China Netcom, being the major shareholder is a key, I think, to make the deal successful.
Right. Okay, so that also highlights just how important it is to be on the edge of China here. So let's take a look, not at the cash cow side, which is Hong Kong Telecom's fixed line, or previously Hong Kong Telecom's fixed line business, which generates however much per year from people who just can't be bothered to give up their fixed lines or don't want to because they need it on one level just to get their internet broadband. The other is pay television over the internet, over broadband. How attractive an asset is that? It's small in Hong Kong. It's successful, but it's small. Can it be? Is it scalable upwards?
Looking at the broadband TV, if you're looking just a year, the subscriber increased by 100%. It's about 500,000 now, and they're targeted about by the end of the year about 750,000. There's 750,000. That is quite a sizable business. In fact, it's this business that helps PCCW and its cash flow and the potential of these bidders who wants to buy into PCCW. I think the most important thing here is how the consortiums, the private equity or Macquarie, is going to structure the deal that they will be acceptable by the China Netcom or the Beijing government. This deal, in fact, came as a surprise because it's an exit by Richard Li. And PCCW means Richard Li. And being a young man at the age of 39, been very successful 10 years ago, who sold Star TV with a handsome profit, it's not a surprise to us, that he's exiting this business and might go into content business.
Am I going to which?
Content.
Right, okay.
Yeah, content is king. I think platform, he's tired for 5-6 years, the whole rate $5-6.
But he tried that. He tried it with now was originally Network of the World. It was a TV station that was broadcast on the internet. Anybody could watch it anywhere in the world, but nobody wanted to watch it because it was no good.
I guess Richard Li has a regional or global play this time because in the past it was very much on Hong Kong content. Yeah, I think that is his card. And that would make him famous if he's successful again. Yeah.
If he's successful, it's a difficult market. I mean, would he not be better off perhaps just looking not just Hong Kong but the China market to start with? And is that feasible? I mean, the Chinese media market is a hard one to crack.
But the potential is huge. You look at the advertising spending, and if you look at WPP, I remember the CEO of WPP, Martin Dien, says. There's so much potential, and obviously it's going to overtake Japan. Maybe 10, 20, 30 years you may overtake US. And advertising market I see a lot of potential in it. Be it outdoor, be it internet, be it print, be it newspaper. It has to open up, and we've seen some successes like some SaaS listed company, by the so-called the Baidu, the NetEase, Sinar. And in fact, if you look at the performance, they are in fact doing pretty okay, and over time, I think they're going to be very big as well.
Does Richard Li still have the credibility to raise the investment capital to go into a content market like that? He bought a Hong Kong Telecom for $28 billion. He's selling all these assets potentially for maybe $7 billion highest.
Yes. So yeah, and he need the cash to invest in fact, in acquiring businesses that produce content. I think he's moving to that direction rather than owning platforms. He's a bit tired. Yes.
but you're happy that he's still taken as a serious player?
Yes, I think that's the way to go.
Okay.
Yes.
All right, Mr. Chaw, thank you very much for joining us today. Charles Chaw, China Knowledge Managing Director, joining me here in the studio. Plenty more to come on Bloomberg Television. Do stay with us. We're going to be back very shortly.